What's going on, everybody? Welcome to the weekly game plan. I hope you guys are doing well. My name is Richard J, and I'm the co-founder and head trader here at Trading Rich. And I'm happy to present to you guys the game plan for the week, how we plan to make money this week. So I hope you guys all had a wonderful weekend and you are ready for the game plan for the week. So this week is going to be a pretty short week here due to Thanksgiving holidays in the US. So if you are in the US, if you're tuning in from the US, we would like to wish you a happy Thanksgiving in advance. I'm here in Canada, so we already celebrated our Thanksgiving last month. So I hope you guys can pardon some of the turkeys on Thursday. Okay, so if you're joining us for the first time, please put in the chat the number 1 so that we can acknowledge your presence and say hi to you. So put in the chat, put the number 1 in the chat if you're joining us for the first time. And also let us know where you are joining us from. Where are you piping in from today? Which city, which country? So if you're joining us for the first time, put the number 1 in the chat. And also, if you are here, you've joined us before, just put in which city you are tuning in from, which country. We'll get started right away. Just waiting for a few folks to join, and then we can get started right now. All right, so let's review what happened last week. So last week was a very interesting trading week. We got another red week in the market here. So let's see here. Let me go to this is the S&P 500. That's the SPY ETF that tracks the S&P 500. So we closed another red week. So far we've had 1, 2, 3, 4 red weeks in a row. So this started in October, and then we've had 1, 2, 3, and it looks like we might close the month at red. So for the first time, we are going to get a first red month since April. So after April, we've had 1, 2, 3, 4, 5, 6 months, and then number 7. So lucky 7. So number 7 is a very critical number in the stock market and in the financial markets in general. So we got the number 7 here, and we've gotten that red month. So I believe that we just have like only 4 days left to finish the trading week here, trading month, I mean. So I don't believe that we are going to close the month green. That's going to be if we close the month green, that's going to be like remarkable, because I don't think that we are going to close the month green. However, we could the bulls can fight back and maybe close this candle halfway through the red body and then have their but what I think is going to happen is that we are going to have a red month for the first time in several months. Okay, so in the week, what happened in the week? What caused this sell-off? So what happened in the week was that on Wednesday we got Nvidia earnings. So Nvidia earnings came in very good. So the earnings were a solid bit, and also their guidance was really strong. So it caused Nvidia to rally. However, what happened was that so this was Nvidia's earnings. This was the Wednesday. This was the Wednesday of that. So this Friday, Thursday, and then this is Wednesday. So on Wednesday we got a green day, and then on Thursday morning, what we got was a long red candle. So it was more or less like a buy the rumor, sell the news event. So it caused the market to sell off. And also, one of the main reasons why the market sold off on that Thursday was one of the Fed governors, Lisa Cook, had said that, like, he was saying something to the effect that the stock market was overvalued, and that that's something that the Fed will have to address at some point, right? Like, because we have this AI boom and all these things going on. And she didn't really talk about anything to do with rate cuts or any stuff. But during the week, Fed members kept on saying they are not sure about rate cuts in December, though all of them were saying different things. And on Friday, all of a sudden, the music changed. The tone of the music changed. They changed it to saying that they were considering, it looks like they were thinking about cutting interest rates in December. So that was what caused the market to reverse on Friday. So we got this reversal here on Friday. That's from the fundamental part, right? From a technical standpoint, it was due to the SPY selling off and hitting the 100 SMA, which is a break wall where typically there's liquidity and a place where price is supposed to bounce. Okay. So yeah, so we'll see how things work out this week. So what the market is looking for is that the market is looking to see. So first of all, Nvidia's earnings confirmed that the AI trade is not dead. The AI trade is still alive, well and alive, and is going to go into 2026. So that alleviated any kind of fears to do with any kind of AI bubble burst and all that kind of thing. All those things were put to bed. But the main problem for the market was interest rate cuts. Also, the Trump administration has said that they don't have plans to release the October job numbers. So that means that the Fed wouldn't have any kind of information to make any decision in December. The Fed rate cut decision date is going to be on December 10th. And if you go to the over here, you go to the economic calendar here, right? So this is economic calendar for this week. So Monday we don't have anything scheduled. So if you're a day trader, there's no any economic data to worry about. Tuesday we are going to get core PPI. That's the producer price index. Things to do with wholesale and stuff like that. The inflation related to that, we are going to see that. That's not really going to be a big deal, but the market is going to be watching that closely because you can use that to gauge what the CPI is going to be. And then we are going to get consumer confidence in on at 10 o'clock. So this is a market moving event. This can move the market in one direction or the other. And then we have Wednesday, we have jobless claims. So this jobless claims is going to be watched closely. We are going to see if, so the estimate is 225. If it comes in higher than this, that's going to be problematic, right? But anything lower than this, so based on what I know, based on what I've seen, the pattern that I've seen this year, anytime we have a holiday coming up, usually the economic numbers are in the sweet spot. So I believe that this jobless claims is going to come in good, right? So whatever it is, it's not going to even cause the market to sell. It's going to be favorable to the market. That's what I think, based on the patterns that I've seen so far. But again, I don't work for the Bureau of Labor Statistics, so I don't know the numbers, but I believe that based on the patterns that I've seen, anytime we go into a holiday, all the economic numbers that come in are usually favorable and it causes the market to rally. So we shall see how that plays out. Thursday is a holiday. That's Thanksgiving holiday in the US. And there's not going to be any trading. The market is closed. So happy Thanksgiving to all the Americans in this live stream. The Friday is going to be, I believe it's going to be a half day, going to be a short day. We are going to get just Chicago business barometer. So it's going to be a short week. So typically in short weeks, what happens is that we get into a low volume market because the guys that control the market, the hedge funds and then the BlackRocks of this world, the smart money, most of them are already out of the office. They've taken time off to go hang out with their families for Thanksgiving. So you're not going to see a lot of volume in the market. So typically what happens is that when market is moving, you can get market to be the price action to be choppy, and also it could also get the price action to be floating up. Like it could float in one direction. Floating in one direction is that if it takes a direction and it's moving up, it can move up and up and up and up and up all day long, right? And then if it's going down, it's going to go down, 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 down all day long. It can do that kind of move, right? So you can get, so the low volume market can just lift the market in one direction or the other. So we shall see how things play out this week. And we shall see how, whether it's going to be a choppy move or it's going to be floating up or floating down to the downside. All right, so now that we know the economic data, let's go to what the Fed tool is saying. So the Fed tool is showing that right now there is an approximate 70% probability that there's going to be interest rate cuts in December. So the market is yearning for interest rate cuts in December. That's one of the reasons why the market sold off in the last couple of weeks here, because of uncertainty with not having any kind of interest rate cuts. But from the look of things, from Friday's statements from Fed members, they are sounding a little bit dovish, and it looks like even though they don't have all the information, they might be pressured to go ahead and cut interest rate in December. We shall see. So based on how like I see things going, I believe there's going to be some kind of interest rate cuts. They are going to be forced to do it, and they are going to end up cutting interest rate, right? So that's going to be good news for the market. It's going to be good news for the stock market. It's going to be good news for the crypto market, and everything is going to cause it to rally. And also for the small cap stocks, those stocks are interest rate sensitive, and it's going to cause them to rally as well. So we shall see how things play out in December 10th. And it looks like the CPI, they've delayed the CPI to be released sometime after December, second week of December or so, right? So we shall see how that plays out. So yeah, based on that, we are going to get this interest rate cut. If it comes, it's going to help the market to rally and go up. So right now, let's go into the charts and see what is happening. So over here, if you've been following my work here and following our work here, and you attended the September masterclass that we did, I mentioned that we were going to get some kind of a pullback, that the market was heading to an all-time highs first, and then we can get that pullback. And my prediction was a 10% pullback, something along that line, a correction, or like a pullback, some kind of a pullback, right? And I believe that so far we've gotten that pullback. We didn't quite get the 10%, but what we got so far shake the market a lot, and it caused a lot of selling off in the market. So I believe that this is the end of the road for the sell-off. That's what I believe. We shall see how that works out this week. If the market stays resilient, if we're able to hold, if we don't break below this area here, this 100 SMA, then I believe that we are going to push up to the upside. So what I'm looking at specifically is that I'm looking to see what happens this week if we're able to trade, like at least if price can come and close above this, you see this red line here, if we're able to close above it, then that's going to be a good sign for the market, right? If you close above it, it's going to be a good sign for the market. That is above 675. Then it negates this head and shoulders. So here we have a head and shoulders pattern, which is a bearish reversal pattern, right? So we've been rallying, and then we got this head and shoulders. That's a bearish reversal pattern. It hasn't triggered yet. It tried to trigger on Friday, but it was a failed breakdown. So if it ever triggers, if we break below 649, then that's going to be problematic for the market, and it's going to go down to the 200. So let's see. Let's do the measured move. So in technical analysis, anytime you have a head and shoulders, you can figure out the measured move of that head and shoulders, like where price can go to from this your head, this your left shoulder, this your right shoulder, and this is going to be your measured move. So the high of the head to the neckline, or the what you call like the armpit, right? So you take this, and put it here, that's what's going to give you the measured move, right? So somewhere around the 200 SMA is where this is going to come to if we lose 649. A break below 649 will send us eventually to the 200. But for now, I think that fears have been alleviated. We shall see what happens in the days ahead here. If this week we're able to close above this 675, then it means that we have negated the head and shoulders pattern. So if the head and shoulders pattern triggers, then trouble. We are going down to the 200. So I believe that we are going to get one last rally in the market, which could possibly take us to all-time highs and new all-time highs. I know that right now it doesn't look like that is possible, but I'm pretty confident that we are going to get that last rally to make new all-time highs and close the year on a high note. So we shall see how that plays out. I believe that should start happening this coming week here into December, right? And then plus the Fed interest rate cuts, if that one comes in December, then that's going to put more fuel into that, and we are going to get that rally to the rally to highs, and we can make new all-time highs from there. So that's what I'm thinking we are going to do here. That's what I think might happen here in the market. Again, anything is possible. So it's two things: we either make new all-time highs, or we come all the way down to this 200. Right. So the lower we go, then the more difficult is it going to be for us to hit that all-time high number. But if we stay here and start recovering this week into next week, I believe that we are going to close the year on a high note and make new all-time highs and possibly have a blow off top in the market. So we shall see how that works out this week. Also, one important thing is that on Saturday, I'm doing a masterclass. So this masterclass here is a very important masterclass. You don't want to miss it because in this masterclass, I'm going to talk about the title of the masterclass is called 2025 Market Endgame. What's the endgame of the market? Are we going to get the mega rally or final rally? Or are we going to get the great reset? So we shall see that. So I'm going to explain from a fundamental standpoint where the market is heading, and also from a technical standpoint where the market is heading. Also, how to position for 2026. So here I'm going to put the registration on link here in the chat. So if you've not registered, please make sure you sign up. It's free. No, you don't have to pay anything. It's a free masterclass. And over here, where are you going to learn? You're going to learn the year-end roadmap for stocks, commodities, and crypto. And also, I'm going to go take a deep dive into the AI boom or AI bubble burst. Is the AI trade still alive? We shall see, right? And what's the smart money positioning for 2026? So the smart money have already started positioning themselves strategically for the new year. They are not waiting, right? Smart money, what they do is that they think ahead of time and then they execute things, strategic position, and also portfolio positioning for the next big move. It's important that you position your portfolio strategically well, either your trading portfolio or your long-term portfolio for what is to come in 2026. So 2026 is not going to be like 2025. It's going to be a very eventful trading year for those that are prepared. It's going to be the year of the sophisticated investor or the experienced trader, right? It's going to be the market is going to shift. We are going to get a shift in the market. So you want to attend this masterclass to learn and get prepared for what is about to happen, okay? So I'll put the link in the chat. Please go there and register, and also share the link with your friends and family and get them to join, because this is going to be a very exciting masterclass and something that you don't want to miss for anything. Okay. All right. So I'll just go back to the SPY chart here. So here, this is what I see here. We shall either get that rally to the upside, or we shall continue selling going down. So it starts from this week. We shall see how things work out this week. Also, let me go to the VIX. Before I go to the QQQ, let's go to the VIX. So the VIX is a volatility index. So if you watch the videos that we posted here on YouTube, that was on Thursday and Tuesday, I talked about the VIX. I talked about this area. So I'll go to the weekly to shrink it up. So this area here, this box, this yellow box and red shaded area is called supply zone. And I said that I predicted that price was going to come here. And when it comes there, we are going to push into the 100 SMA on SPY. And we did so. And now we held. So right now, what I'm going to be watching this week is that, is the VIX going to collapse? Or is the VIX going to regain strength and blast through this yellow box? If it does, then trouble, right? Trouble for the market, meaning that we are going to head down. We are going to head towards the 200 SMA on SPY. However, if this continues crashing and comes down, then we are going to get that big rally to the upside. So we shall see how that plays out. So the VIX is a volatility index for the SPY. It's the opposite of what the S&P does. So anytime this is rallying or green, typically the SPY or the S&P 500 index is red. Okay, so we shall see how that plays out in this week. QQQ. So QQQ is in the same boat as SPY. It came to the 100 SMA, pierced it, and then held, right? And now what it's doing now is that it is trading above the 100. And what it needs to do is that this week, it needs to trade above this downsloping trend line and possibly close above this. If you can close above this 614, then it's bang on. Next week, the first week of December, then we are going to push into the Fed rate cuts. So if the market thinks that the Fed is going to cut interest rate, then it's going to start moving in that direction of the market, of the interest rate cuts. So do not be surprised if we hear more things about the Fed speeches and stuff saying that, okay, they are going to cut interest rate. If that becomes a certainty, then do not be surprised to see the market make new all-time highs or go back to previous all-time highs before the Fed rate cut on December 10th. Do not be surprised, because it's just 5% away from here, and it could do so in no time once that is confirmed. So we shall see how that plays out. But for now, QQQ has a lot of work to do. It needs to get the army of the AI trade to push it up to clear this area where you have the head and shoulders as well. This is your head, this is your left shoulder, this is your right shoulder. We need to clear above this. So if we can close above 614, then it negates that head and shoulders pattern and means that we have clearly recovered and we are going to go up and make new all-time highs. So that's how I see it. And I believe that this can happen in a flash in no time. Just a couple of days, you can see this going to all-time highs very soon. Okay. All right. So now that I've talked about QQQ and SPY and VIX, let me talk about the DIA. That's the Dow Jones Index. So Dow Jones Index was also came to the 100 SMA. So everybody got a haircut. Everybody came to the 100 SMA, and they are bouncing. Last week in our swing trading service, the swing trade of the week was this DIA puts. So we captured the 670 puts, and we're able to expiring this week, and we captured the move to the downside. One of the reasons why that trade was taken was that if you go to the weekly, you can see a topping tail candle. Anytime you see like a topping tail candle forming after a long run in a stock or an ETF, it tells you that a reversal is coming. So we took advantage of that and we shorted this to the downside for 100% return on investment. So that was really, really nice, right? For the put trade. Okay. So I believe that once the market here is recovering here, the futures market is showing green. The last time I checked, if the market starts recovering and it stays green, then we are going to get rallies to the upside, and we are going to see the Dow make new all-time highs again. So far, the futures market is strong so far. The ES is up by almost 30 points, which is approximately 3 points up. So if you go to the SPY, and I just do the approximation, it's going to be, if the SPY was to open right now, it's going to be, so it's from here, 660. So it's going to be somewhere here around this zone. So it could be trading above this downsloping trend line, which is a good thing, right? So that means that it's going to be trading, it could blast through this 9 EMA and then push up here to this area. So we shall see how that works out tomorrow. But again, anything can happen overnight in the futures market. It can go red or it can go higher, who knows, right? But so far, I believe that based on volume, based on a whole host of things, I think this is the bottom, and we are going to go to all-time highs first before we go lower. That's how, if I was a betting person, that's how I'm going to bet. Okay. So if you look at this, I forgot to add this. If you look at this, you're going to see that if you look at this volume here, this volume was from this volume here from this date is from, this was November 19th. This has been, the last time we got such a volume was on October 6th. So this is called a capitulation volume, right? When you get to the final stage of a sell-off, you get that pour out like that, right? And a sell-off like that, what happens is that it leads to exhaustion, and then that leads to what? Reversals. So if you look at this volume here has been high. If you look at the weekly volume, let's go to the weekly time frame. I think that's a better one, because here the last time we got such a sell-off volume was in 2022. So yeah, 2022. You see that? That's 2022 August. That's when we got that. So I believe that this, based on this analysis, I believe that we have reached the low point of the reversal, the lowest point. Then we are going to get that reversal to the upside. Also, one other thing that I look at is as well is the fear and greed index. The fear and greed index last week went to as low as what? Previous close was 6. It's 6, right? So this goes from 0 to 100, which means that this is a percentage scale. So if something went as low as 6%, I mean, on Friday when we were trading, I talked about this in our live day stream, and I mentioned that at the time this was around 7 or 6, and I said that because this is at 7 or 6, we are at the bottom, or we are nearing the bottom, right? Because how low can this go? 0. Can it go to negative? No, it can't go to negative. The lowest it can go is 0. So if you take a step back and go in the past, check in the past to see what happened. So on April 7th, which happens to be the low of the Liberation Day low, or April 8th, we went as low as 3 on the fear and greed index. If something gets to 3%, and the lowest you can go is like 1 or 0, what do you think is going to happen? That means that is the bottom of the market, of the sell-off. So let's go back and check April. If you look at April, this is April 7th. This is April 7th. This was the low around this area. That is where we got the fear and greed index at 3 or 4, right? So that means that, so based on that same analysis, I believe that we have bottomed in the pullback, and we are going to go higher. We are going to go higher first before going lower. That's what I think. But again, anything is possible. Anything can happen. You can get black swan events. You can get things that are unexpected that can move the market in a separate direction. But based on what I've seen so far, it is ready to rally to the upside. Okay. All right. So now let's look at some of the other tickets, some of the other trading assets. One of them is Bitcoin. So let's check what Bitcoin is doing. Is Bitcoin recovering, or is it continue selling. Let's check Bitcoin. So Bitcoin, BTC, Coinbase. So with Bitcoin, last week we had a live stream. Those that attended, I talked about these two lines. One was the yellow line and one was the red line. I mentioned that if we don't hold the yellow line, we're going to hold the red line. So guess what? On the week, price sold, and then where did it close? It closed above the red line, meaning that that place is a place of liquidity, whereby there are folks who are willing to defend that level. So here we close there and we are trying to hold. If we're able to push up and push to at least 90,000, then that's going to confirm that, okay, we are now making that reversal. But at least if this can push up to 93,000, then we are going to negate the downtrend. So if you look at this, So here we have lower lows, right? This low is low. This low is lower than this low, like that, lower lows. So if we're able to come somewhere here and trade above 94,000 or 93,000, we are going to negate the lower low, the previous lower low, which is this one, right? Before this one. We are going to negate it, confirming that a reversal has been confirmed. And if we get more follow through to the upside, that means that we are going to clear it completely, right? So again, my take is that if we're able to get this to trade above the yellow line, then that's going to be mission accomplished for crypto, and means that we are going to head up from here. So I believe that what we got last week, which was last week's low, Friday's low, will be the low for now. And then Bitcoin has the ability to make new all-time highs and even go higher. As long as we don't break below this 80,000 level. So for the bulls have to find a way to get Bitcoin above 90,000 or 93,000-ish, right? Above this yellow line. So let's give it 93,000. And then the bears need to find a way to break below Friday's low, which is around 80K. So breaking below 80,000 means that they are going to head lower and we are going to get more sell-off. But if we're able to remount the yellow line, reclaim the yellow line, that will be very positive for the bulls, and they can push this up to 100K. And then once they get to 100K, they'll start pushing up. Then it's going to be the sky is going to be the limit, right? So for now, based on this, I believe that Bitcoin has bottomed so far, until further notice, until something else happens. But I believe that Bitcoin has bottomed. So once you see money going into Bitcoin, which is a risk asset, and crypto, you are going to now see more movements in the stock market. You are going to see all the stocks, all the high flying stocks get back again, and everything is going to rally to the upside. And with the interest rate cut coming, it's going to help everybody and push the market up. So we shall see if the bulls win or the bears win this week. Nobody knows. But for Bitcoin, 80,000 is a critical level for the bears. And then for the bulls, 93,000 plus is the crucial level for the bulls. If they're able to defend that and push Bitcoin up to that area, then that's great. They'll send it down to higher numbers. To first, they will now go to the 200, and then they can go to the all-time high or new all-time highs. All right, so let's look at Ethereum. Ethereum is the number 2 cryptocurrency. So Ethereum, so far, it's holding this parallel channel. So when I was doing my analysis, I saw that this parallel channel here was a very critical one. First off, it was, so you have a trend line. So if you look at this closely, let me get my drawing tool here. If you look at this closely, you can clearly see that this is what this here is: 1 touch, 2 touch, 3, 4, 5, 6, 7, like several places where it touches, right? That tells you that this is a critical level. And also, once you clear it, once you clear this stuff and you go to you take the parallel channel and push it up, you are going to see that. Let me take this out. So let me take this out here. Okay, so here, if we do this here, we connect the parallel channel. So here you have this connecting here, goes that way and to this area. See that? So here, goes to the low. And once you stretch it, that confirms this parallel channel, right? Confirms this trend line with the formation of the parallel channel. So if, as long as we're able to hold this lows, this area, you are going to get Ethereum 2,600-ish. As long as we don't break it, we are going to see Ethereum recover and push to the upside. Okay. And then it's going to be trading within this channel. So we shall see how that plays out. But Ethereum looks like it has bottomed and it's ready to reverse as well. Okay. So let's go to gold and see what gold is doing. So this is what I think is going to happen this week here. I think that we are going to get liquidity rotation, right? Where we are going to get rotation from gold, money being taken away from gold and silver into things like Bitcoin, right? Because, investors say, okay, well, I don't think I'm going to make a lot of money here, so let me move some of that money from this into Bitcoin. So if that happens to Bitcoin and the stock market, if that happens into crypto and the stock market, if that happens, then that means that there's going to be liquidity moving away from gold, which is going to cause it to sell. So right now you can see that the gold is red, and we will see if it's able to break below this this wedge. If it breaks below this wedge here, that means that we are going to head down and we are going to head to this area. This is the this is the 50 EMA on the daily, right? It's going to come here and then you're going to see if it can bounce there. But if you see Bitcoin rallying, stock market rallying, most likely you are going to see this decline, right? And it's going to come here and test this area. For silver, let's see what silver is doing. Let's see what silver is doing. So with silver already put in what looks like a silver already put in what is called a double top, right? Double top. It's a double top here, right? So double top is a bearish reversal pattern. Okay. So if you get a double top, that's a bearish reversal. So one top, two top, that's a double top, right? Meaning that we are heading down, we are going to go down. So this week here, I'm going to look to short silver, just like looking to capture a quick move. So I'm going to look to short silver to the downside to at least bring it here to this 50. If I can get that move, that's going to be a nice move. Just a quick day trade scalp to the downside to this area, right? Because I know that once it gets here, it's going to encounter a break wall and it's going to bounce. You see, the last time price came here, what did it do? It bounced. So I believe it's going to do the same thing. However, if it breaks below here, then we are going to head down because there's a lot of, for silver, there's a lot of, it has a price imbalance. So if we look at this, once it breaks below this red line where the 50 is, it comes into this valley of death, right? This area here. This is like a volume gap. So it's going to come in here rapidly and come all the way to $41. So we shall see how that plays out. So if this narrative about Bitcoin recovery, if Bitcoin recovers and pushes up, then if we get that liquidity move from gold and silver, then you are going to get that move to the upside. So one ticker that I'm watching this week is to, if the stock market is strong and the crypto market is strong, I will look to gauge what gold and silver is doing. I will look to short silver, right? So you see here, I have the trend line already here on my chart. So I'm going to look to short silver. If silver breaks below this trend line, I'm going to look to short it. First target is going to be here, the red line. And then once we break the red line, I know that all hell will break loose and we are going to go down and get to higher targets. Like you can get to 42, and then we can get to 41 as well, somewhere here. So this is an area where I think that if price comes here, it could now bottom, right? Because here is going to be a triple bottom. Okay, so you are going to get bottom number 1 here, number 2, and then if this comes all the way down, it's going to be number 3. So that's going to be the last chance saloon for it to see if it can reverse. If it doesn't, then it's going to head down and make its own correction, right? Because if you look at this, it hasn't really. Let me restart this here. It hasn't really corrected that much. So we needed to pull to make at least a 10% correction. Let's see if I can get a 10% correction from it. So let me go to silver again. I just want to check something. So from here, this is the highs. If we go to the 100 SMA, how many things is going to be? Oh, that's going to be 20%. That's a huge one. I think silver has already corrected. Yes, 5%. So if it goes down to this area, what is it? Almost 15. So I believe this area will bring it to around 15-ish or 12%. Then I believe that that's going to be more than enough for it to bounce, right? So we shall see how that plays out in this coming week and in the weeks ahead. So for GLD, same thing as it has to hold this wedge pattern. If it's able to hold it, then it's going to push to the upside. If it fails, it's going to come to the 50. Okay. All right. So now that we have done this, let's look at the individual stocks, right? Which stocks are showing relative strength? Which ones are showing weakness that we can short moving forward? So I have a couple of stocks here. So the first one that I have is that we go to the Magnificent Seven. So I pick one of the best performing Magnificent Seven stocks the month of November has been Google. So Google is an interesting one. I believe that from a fundamental standpoint, Google is undervalued. It has a very low P to E ratio, and I believe that Google might be setting up for a additional breakout this week, or it could sell. So I have this trend line here that I'm watching. This one here, this one from December 2024 up to this highs. So what I'm looking to see on Google is that if we can break above 304, we can get that breakout to the upside, and we are going to get into 312, 319, or 320. So you can see Google closing at 320 this week. If it can break and hold above 304, then once it does that, we are going to get that breakout. However, if it fails, we are going to come down, possibly come and retest this 291, and then if it doesn't hold, then it's going to go down and come somewhere here and fill this gap. There's a tiny little gap here that needs to be filled. So it's going to come down here and fill this gap, and it's going to come to like 276-ish, or come somewhere here to 272. So we shall see how that plays out, but it looks like the momentum is to the upside. If the market is strong, I don't see any reason why Google is going to sell. Or maybe folks are taking money from Google and putting it into other magnificent stocks that are currently undervalued, right? Or have sold off a lot. Not undervalued based on the fundamentals, but in terms of they've sold off a lot and they are ready for a bounce. Okay. All right. So now that we've gone through Google, so Google is a long, and I mean, if it fails, we can get some kind of a short, but the long looks probable. But the volume has to continue increasing for that to happen. So if you look at this, you can see that the volume here is high. It's one of the highest volume it has gone in for some time now. It needs to maintain that momentum and even go higher than this volume. If it goes lower than it, then we can start. It's going to start showing weakness. We are going to go down. But the higher the volume, if it produces more higher volume, or even something equivalent to this, then we are going to get that breakout to the upside. Okay. All right. So next Magnificent Seven stock that I'm going to be watching is Tesla. My favorite stock, Tesla. So Tesla if you look at this wedge pattern here, you can see that anytime we came here, we bounce, right? We bounce and stuff, and we are holding the 100. So I believe that this thing is ready for a reversal, as long as the general market itself is strong, right? If SPY and QQQ are strong, you can get to see Tesla bounce. So here, the last time it came here, bounce 1, 2, 3, and this was close to it 4. And here we have a double bottom, right? Bottom number 1, bottom number 2. So if tomorrow it can clear this area, remount the 100, I believe that this had legs to push. And Tesla is the only Magnificent 7 stock that hasn't hit all-time highs since Liberation Day sell-off. So it has this work cut out for it. And once it's able to clear this area, this moving averages congestion, and trace above the 50, then the sky is the limit. I believe is going to push up and make new all-time highs. So for Tesla, I'm looking for longs as long as we hold the 100 and as long as we hold this upsloping trend line from April. So is that April lows? Yeah, upsloping trend line from April lows to where it is right now. So this is the Liberation Day trend line. If he holds it, then we are good to go. If he breaks it, then trouble. Then it means that this could come as low as the 200. But based on what I see here, Tesla is ready to reverse as long as the market is strong, right? If the market is strong, there's no way Tesla will be selling off, right? The market is strong unless something happens to it fundamentally that causes it to sell. But if all the Magnificent 7 stocks are rallying, Tesla will also participate in the rally as well. Next one is the king of the market, NVIDIA, the most valuable company in the world. Okay, so with NVIDIA, we've had this sell-off here to this area. On Friday, it sold off. And then on Friday, those in our day trading room, we caught the NVIDIA puts. We caught the puts to the downside here, and then the body back, and it closed above this 180 level on the SMA 100. So now what it needs to do is that if the market is strong, again, the market cannot be strong without NVIDIA, right? It has to be strong with it. So if the market is strong, then it means that NVIDIA is going to rally and is going to push up. And look at what we see here on NVIDIA. This is your head, left shoulder. This is your right shoulder, right? So this is your head and shoulders. So this head and shoulders, if this is negated, we need it to negate when NVIDIA comes all the way to what? 195. And the first thing it needs to do is to clear this moving averages congestion. You see this? You have the 5, you have the 50, you have the 9, you have the 20. It needs to clear it. Once it clears it, then up and away is going to be gone, right? So again, on Wall Street, there's a saying that as the semiconductors go, so does the market. If the semiconductors sell off, then the market has no chance. It's also going to sell off. And we've seen what happened once NVIDIA collapsed on Thursday. It affected the entire market. Everything sold off aggressively. Okay, so we shall see what happens to NVIDIA, and then we shall take it from there. Also, the SMH. SMH is the semiconductor ETF. That's where all the semiconductors does their ETF. Yeah. For AMD, for NVIDIA, for what's it called, AVGO, MU, all those companies. This is their ETF. So here you can get, so this is the head, this is the left shoulder, this is the right shoulder, right? And this sold off to the 100. That's why it's holding the 100. So I believe that if NVIDIA start recovering and the market start recovering, no doubt this one is also going to recover and possibly make new all-time highs. We shall see how that plays out. But the market movement this week is going to be dependent on these semiconductor stocks. If they do well, then, or if they recover, then you are going to see NVIDIA to the SMH recover and NVIDIA to recover. Okay. So for this one, as long as we don't break below the 100 SMA at the 315 level over here, we are going to push up to the upside. Okay. All right. So now that I've gone through this Magnificent 7 stocks and stuff, let's look at some other stocks that I'm looking at in terms of from a shorting perspective, right? So let's look at AMD. It's also a semiconductor company. So AMD, AMD is an interesting one. AMD went up, like AMD was here at 171, and all of a sudden on the Monday, this was a Monday, there was news that came out of pre-market that OpenAI has a deal with AMD to own 10% stake for $100 billion. And because they had some kind of connection with OpenAI with that kind of shady deal, what happened was that it caused AMD to rally. It just gapped up massively. So from here, where it closed somewhere here, to this area, to the place that I ended on that day, was what? Almost 20% move in one day. AMD just took off like that. So since then, AMD has been trying to hold here, even after earnings and stuff. And what he's doing now is that what is he doing is coming down here to fill that gap. So he almost got the job done on Friday, but he couldn't quite get to the gap area. So I'll look to see what happens here, because this could come all the way here, bump his head into this 50, and then sell. Right? So we shall see. So this is a stock that I'm looking to short here this week. If we're able to take out 194 support. After 194 support, the next level is going to be the 100, which is going to be a break wall. So looking for a short from here to that area is going to be nice. But if it's able to remount the 50, then it tells me that momentum is tilting towards the upside, and we shall see if they can continue from there. But all is going to be dependent on the general market. Okay. All right. So next thing I'm going to look at is I'm going to look at a crypto stock. A crypto stock that has been beaten down because Bitcoin has been selling, everything has been selling off, right? And I like the trade because it's a low risk trade. And that trade is this one, Mara. So Mara used to be, I mean, those that were trading in the pandemic, Mara used to be the crypto alternative, the Bitcoin alternative. Anytime Bitcoin is going up, you want to go trade Mara so that you can capture the move for crypto, the crypto move, the crypto rally. So we've seen this sell off. This has been selling off. I think they need to do something about this stock. It's been selling off, selling off, selling off. Now it's at here at $9. And what do we see here? This is a weekly time frame. What we see here is a double bottom. So is this double bottom going to hold? Is this reversal pattern going to hold? Or is it going to lose steam and come here all the way to $7? So if you don't hold this double bottom, we are going to come to the $7 mark, right? We are going to come to the $7 mark. But if we do, we are going to get that reversal to the upside. So this is something I'm going to be watching here. I've not traded this in a long time, but we'll see how this reacts to the rally of crypto. If crypto recovers, then Bitcoin recovers, then it's going to favor Mara. So Mara is a company that mines Bitcoin. So it's a mining company, crypto mining company. They mine Bitcoin and Ethereum and stuff. So the more Bitcoins that they have, that determines the value of the company, right? And also the price of Bitcoin. So let's say you're a company that owns 1,000 Bitcoins. So you multiply that amount of Bitcoin to the price of Bitcoin now. That's the value of your company plus other factors. Okay, right. So that's Mara. Another one in the crypto space that I like the setup as well, just like Mara. Same idea, double bottom, right? Circle. So Circle is a stable coin company, and it has sold off a lot, and it's now here at this double bottom area. And you have to ask yourself, how low can it go? The thing is, we went to all-time lows. So how low can it go again? Maybe something below it. So this is a high probability trade whereby you can take it, swing it, and profit from it, because your stop loss has to be below this double bottom. If price for any reason comes and closes below, if the daily candle closes below this level, this $64 level, then you should be out of the trade. And on Friday, we saw that recovery starting. The green candle closed above the body of the red candle, telling you that there's a reversal coming. a reversal coming, and that is going to be confirmed this week if we're able to trade above the 5 and above the 20, meaning that a reversal is coming. So this stock here could be trading at $97 or 98 by the end of the week. Don't be surprised. And once we get into the 20 SMA magnet, then this will be off to the races and go. So this stock can give you a 20-point move, a 30-point move in a short period of time. And this kind of moves are going to be very lucrative because these stocks, this type of stocks, the DNA of the stock is volatile. So if it does move, you are going to get a big return on investment on this. Okay. Yeah. So something like buy the options, like you can buy options. Again, this is not financial advice. You have to understand what you're doing. And I'm just this for educational purposes only. So here you can get like the something expiring in December, right? December 19th, you can get something like $75 cost or $80 cost will get the job done. And if this is able to go to $80, you are going to make a mint from this. Okay. So Circle is a good one. Circle also has like a leveraged ETF. Circle is this G. Yeah, this one. A leveraged ETF. So there's like $2 right now, $2 something. And you can buy something that expires sometime next year. That way you don't have to worry too much about it. Or you get something, expiring in March 2026. All this, there's no volume in it. So you have to be careful with that. So maybe you get something January 16th. You see this one has $5 calls, has 28 people. So at least it has enough volume. You can buy it and hold it and see. But if you can get $3, that's even better. But for me, I would look to get the actual one, the actual thing, and because now the price is not as expensive as it used to be when it was somewhere here. Okay, all right. So that's Circle, and I believe that Circle, if Bitcoin recovers and shows trend, this thing is going to rally, and this is the kind of trade where you can get a 20% move in the equity in no time. And that is going to be, so my main target is to get this to come somewhere here. If it can come here at least to $100 level, that's more than enough. And then we can dream bigger. Okay. So these are some of the profit targets that you can use if you want to trade this a high probability trade. And it's a low risk trade because how low can this go? The thing is already at all-time low. So that's the best time to buy. Okay. All right. So another ticker that I've been watching as well is in the healthcare spaces, UNH. So healthcare has done really well this month. If you check the healthcare ETF XLV, I believe, yeah, it's XLV. Look at that XLV. Look at the monthly. Fantastic, right? Compared to the tech one, SLK, right? Technology, big red, right? And to other things like energy, energy has been being beaten down several times, so it's not really a thing, right? Energy is being beaten down. But yeah, so basically what we can see here is that the XLV, which is the healthcare ETF, has been doing well. Healthcare is trading at all-time highs, and UNH is part of that gang, right? So here, so I believe that this year is looking to go. And again, if you are part of the community and you're following the YouTube and stuff, you know that we caught this at the bottom here, like we caught UNH at the bottom. So UNH type of trade is similar to what you're seeing with Circle, right? So when it came down here, the question was that, okay, hey, how low can this go? Yeah, I mean, it can go lower, but this was the place where this sold off to, and it came all the way even lower than it. So that was the best time to buy, and it presented that nice opportunity. We bought it at the lows here, and we bought the leverage ETF and made significant return from it. This thing went to around 500% or something return at the close to the 200 before it sold off. So I took some profit off the table here. I'm still holding a tiny piece to see if we can get more push to the upside, but most of it is I took profit from it. So this was a very nice trade. And I believe that now that it has reversed, it's ready for now that it has sold off a bit, pulled back a bit, it's ready for a reversal to the upside. So if it can break and close above this trend line, we can go to this gap. There's a little gap here that needs to be filled. So we can get UNH maybe 340 calls and buy time on it, like buy 2 weeks out, 3 weeks out, something in December. That should be able to give you that move to the upside. So yeah, so I like this setup for UNH. And yeah, so this is set up for UNH here for this move to the upside. So what I would say is that if you have a portfolio, like a long-term portfolio or any kind of portfolio that you have for trading, this is a good time to watch and see, especially if you own the shares of the stock or even the options, leap options. This is a time for you to sit back and check and see, how did your stock perform in this pullback? How do your stock perform in this pullback? So let's check. SPY is trading. A good way to do that, a simple way to do that is that if you have your technical chart set up, is to check where the 100 SMA is. Then go to your stock and see where it's trading to see after this pullback, where is it trading? So example, you can check out a stock like Oklo. So Oklo, your stock, if this is your stock that you own, is trading below the 100. It's getting close to the 200, right? From its highs to this area, where it sold off to, it sold off 60% to the downside, right? So if you're holding this kind of shares in your portfolio, this is just a warning sign, right? You are going to get one last chance to offload this stuff, right? You are going to get one last chance if we get the all-time high rally, right? If you get an all-time high rally, you are going to get a last chance to offload this before 2026. Because once we get to 2026 and the market dynamics shift sometime next year, all these stocks will crash into ashes. Like a stock like this, which has no revenue, is just trading on hype and AI and all that stuff. This is a stock that could be trading at $5, $5 or $10 once the real crash comes. This is not a crash. This is just like a pullback. If we get into a brutal bear market, based on maybe something to do with a recession in the US or something of that sort, these stocks are going to get demolished, right? If you don't believe it, look at stocks like Peloton, right? Peloton was a pandemic darling, right? Look at this. Let me go to the weekly time frame. This thing came in 2021. This thing came to 174, and it came all the way down to what? $2. Two. Let's give it $3. Let's be generous. $3. So if you were the type that you are holding this and you don't know how to value your stocks to figure out which ones to hold and that kind of thing, you'll be holding the bag. Peloton is never going to 170 anymore. It's never going to happen again unless we get maybe another pandemic and for some reason they come up with something great and they are making more money. Otherwise, this is not going to be a stock that you have to be holding. Another example is Zoom. We all know Zoom. We all used it during the pandemic, right? And Zoom went as high as what? 588 or let's say 590. Where is Zoom today? Zoom came all the way down here. It's trading at what? 78. So from here to even the lows where it came to in the bear market here, it's a bear market, I believe, even 2024 is here. 90% sell-off. So that is what is going to happen to most of these high-flying stocks once we get into a brutal bear market. So you want to be vigilant in that. You are going to get one last opportunity to offload all stocks that are not profitable companies. You have to be exiting them, right? Because once we hit the recession and then the brutal bear market, all those stocks are going to sell off heavily, right? So you don't want to be holding them, right? You can take some risk, you can hold some, but If the sell-off comes, nothing is going to be spread, and we've seen that. This is just an example. This is just a warm-up to that. Okay, so one other stock that I like as well, I like the setup, is I like Rigetti. That's a quantum computing company. So this is a classic break and retest play. So here, this was Rigetti's high. Rigetti is here. Rigetti, whoops. I think I already have it. So Rigetti, this was 2024. Let me go to the this was Liberation Day low, and then pushed up. So this was the all-time highs from January, and then it came here, Liberation Day low, and then this was the breakout zone, right? And then it rallied all the way to this area. So it rallied all the way to this area here. It rallied all the way to this area here. From here to here is 153%. So it has come back, retraced to the scene of the crime. So I like this setup here. And this could be like, this area here is going to be your stop, like $21 is going to be your stop. And if we're able to break above, like if we get a candle that closes above this moving averages congestion here, the 100, the 5, and all this stuff, we are going to get a push, and at least first profit target should get you into the gap fill, and then you can go higher from here. So Rigetti is a good one. This is a classic break and retest play, retrace to the scene of the crime, right? So this is the type of setup that I used to call the bottom on April 7th, when I called the bottom on the market. Let me go here. It's similar setup. Okay, so what we saw here was, let's go to the weekly. We saw that, so this was the bull market highs of 2021. This was the bull market highs of, so gold is selling off. So we are going to get gold is really selling off. Bitcoin is going up. So it's showing liquidity moving. But I think by the time we wake up in the morning, we are going to get Bitcoin at 90,000 thereabouts, and you are going to see gold and silver sell off. So tomorrow we can get opportunity to short gold and silver to the downside, and then long Bitcoin and then the stock market. So I think there's that liquidity shift that is happening right now, and that is something that is going to get Bitcoin and stuff to go up. Okay, yeah. So here, going back to what I was saying here. So here we have, this was a bull market, right? This was the bull market. This was a COVID bull market. It topped up in 2022 or December. This was January 2022 or December 2022, right? This was the highs, okay? And then what happened? So the market declined, came back, and then went up, right? And then what did we do? We blasted through and we went to highs. This was the 2024 highs, right? And then what happened? 2025 February highs. That was a double top, anyways. So this is the 2024 highs, this one, and then that's the double top. And then what did you do? Liberation Day sell off, like market started selling off before Liberation Day in April, and then it came back and it came here where? Retraced to the scene of the crime. So this where it came to what? The previous all-time highs, which is going to be a brick wall of support. That's why I called the market bottom, said, hey, we've hit the bottom, right? Because how low can it go? It has to respect this area, and that's what is happening. So similar thing is happening here with Rigetti, right? So it's like a break and retest, or what I call retrace to the scene of the crime. Okay, so Rigetti. So here, look at Rigetti here. This is the highs of 2024. And where did price come to? Boom, price came here, right? Area to bounce, high probability area to bounce. And then we put in this doji candle, signaling that there's a reversal coming or bottoming tail. And once we trade, if we can trade above this area this week, this has room to push, and you see this push up to the upside. Okay, so yeah, so we see gold selling here, silver selling here. We shall see what happens this week here. So I'm looking to this is a thing that I'm looking to short. So silver SLV short, GLD short. I'm going to be looking to short both in the morning if it sets up in our day trading service. Okay, so once again, if you join us late, there's going to be a masterclass. We're going to be doing a masterclass on September 29th, where the topic is going to be the mega rally or great reset, right? 2026 market end game. I'm going to talk about what the plan for the market is, like where year-end roadmap for stocks, commodities, and cryptos. I'm also going to talk about the AI boom or the AI bubble bust. We're going to talk about fundamental analysis, where the US economy is heading, and also smart money positioning. The smart money have already started positioning for 2026. They are not joking. They're serious, right? So last week I had a trade that I had on my I traded SPY. I bought SPY 650 puts, which was supposed to expire December 31st. And based on the analysis, SPY showed that head and shoulders, and it was triggering to sell. So I took that trade. I was red for some time, but I eventually played out. Because if you check their options flow, you are going to see that JP Morgan already had some kind of shorts and stuff in the market, where they were shorting. They were targeting 6,500 on the S&P and 6,700, like those targets from all-time high. So they've had that position there sitting there for some time, and we saw that move to the downside. So again, sometimes some of these big picture idea trades take time to play out, and you have to be patient. You have to be willing to take a drawdown for some time for it to play out, and it worked out nicely. I took up the final profits. It was more than 100% return in the final profits, right? So these are things where in this masterclass I'll be sharing some of the strategic positioning that the smart money are making right now for the new year, right? Because the new year is going to be won and lost right now if you start planning now. You don't want to wait till the new year and you start planning. You have to start planning right now so that you can take advantage of that. So again, this is a free masterclass. It's a free masterclass, and you can get it here and you can sign up. I'm going to put it again in the chat. It's already in the chat, but I'm going to put it again just in case it's lost in the system. So I'm going to put it here. Boom. Right. I'm putting it here so that you guys can get. So this is, so again, anytime I have this master classes, last year November, I had a similar master class and I called the market top, right? That was when I say, okay, the rally is over. This is the market top. We are going to go down from here. And it happened, right? And then I had one in January. I talked about a possible bear market scenario for the stock market due to tariffs. And we saw that happen during that time, right? We saw that happen. The market, bear market, the technical definition of a bear market is 20% or more decline from recent highs or all-time highs or wherever the highs is, right? So we got that this year. At the same time, I said, oh, we're going to get it, but we're still going to reverse and stuff like that. Everything. So the only thing that hasn't happened yet is the recession. But that one is coming. That one is coming next year. The recession is coming. At the beginning of the year, no economist was talking about recession, right? Nobody was talking about it. They say, oh, no, there's no way there's going to be a recession, this, that, all that kind of thing. But all of a sudden, everybody has started talking about recession, and it's looking likely that a recession is coming. If you look at all the big tech giants, like Amazon reported they were going to lay off, I believe it's 18,000 engineers. All the other companies have started laying off people. Some of them is due to AI, some of them is due to other things. So what you have to be prepared for what is coming so that you can execute and take advantage of it. Okay. Right. So what I'm going to do here is that I'm going to also so if you have any questions, so this is the time. If you have any questions, please please go ahead and ask your questions. I'll be happy to respond to the questions. So I'm done here for tonight. and those that we trade with. Again, so if you want to trade with us live, trade with me live every day, you go to our website, Trading Rich. So the last couple of weeks here has been a market for day traders, and it's been fantastic. Like for those in our day trading room, it's been awesome. Let me just go here, go to the courses. No, it's not what I'm looking for. Yeah, so here. So if you go to our website, we have the various services that we have. We have the signal service. If you're looking for a signal service with a high win rate, then you can sign up for our swing trading service. It's only $47 USD. And then over here, I talk about, I give you a game plan of what tickets we have, how we are going to trade it, the entries and exits, and I let it when I take it with my money and stuff. And then again, this here is something that if you are busy and you can monitor trades and figure out things, you sign up for it, and then we are led the trade. So last week, one of our trades of the week was DIA puts. That one worked out really nicely. So we're able to capitalize on the trade. So this week, we have other banger trades ready. So the subscribers already know we already have a video for that, $47 USD per month, or the yearly package is $470. Also, if you are the type that, so this is a weekly thing where you can make some money on a weekly basis. If you are looking for something that is more active, that is going to be done on a daily basis, like every day, except on statutory holidays. So we are not going to be trading on Thanksgiving Day on Thursday, or any day that there's a holiday. No trading, right? But as long as the market is open, we are live, right? We are live trading. And the good thing is that we only trade 1 hour. We only need 1 hour of your time. From the time the market opens at 9:30 a.m. to 10:30 a.m., that's where the action happens. That's where you can make your money. Sometimes you are done in 5 minutes. Sometimes we are done in 30 minutes. And it's been absolutely fantastic. Like those that are part of our day trading service, every single day we are getting opportunities in the market, right? And once you have that kind of, last week where the market was choppy, goes up, come down, goes up, come down, that's a market for day traders. So this service is only $97 USD per month, and then the yearly package is $970. So you get 2 months off free, right? So again, if you want to level up and take your trading to the next level, if you are an options trader or you're a futures trader and you're struggling to become profitable, this is the service for you, right? We trade a specific strategy. And the reason why I like it is that you can get it done within the first hour of the market open, finish it, go do your 9 to 5, go run your businesses, go take care of family, go do other things like go shopping, go golfing, whatever you want to do, right? You can go do it and not sit behind the computer all day long watching candles, right? Yeah. And there's always opportunity in the market. So the strategy works in both bear and bull markets, and we've seen it happen even when the market was selling off. Okay. So in 2026, if we get a market downturn, we are going to see that the strategy in action as well. So let me know if you guys have any questions. I'll be happy to respond to your questions. Otherwise, we have everything is good to go here. I'm going to put the link to the this is the day trading service. I'm going to put the link here. And I'm going to put the what's it called? This is the day trading service, and I'm going to put the swing trading service here as well. So if you are interested, you can sign up, and then we go from there. Alrighty. So let me know if you guys have any questions. I'm done here for tonight. I would be done here for tonight. So we'll let me know if you have any questions. Let me see here. Okay. No questions. Okay, so if there are no questions, then if you're joining us for the first time, please make sure you subscribe, hit the notification bell so that next time I go live, you're going to get notifications. And also don't miss the upcoming masterclass, right? Because this is the masterclass that can change your entire portfolio and your entire market strategy as we go into 2026, because 2026 is going to be the year of the sophisticated investor and the experienced trader, right? It's going to be different from 2025, right? So this is the time to buckle down, to join the masterclass, and also learn, because the market environment is going to change and the dynamics is going to change in 2026. So yeah, so thank you for tuning in, and we'll see you guys. For those that we trade together tomorrow, those in the community, we'll chat, and then we'll trade again together at 8:45 a.m. Eastern tomorrow, and we'll look to catch some good trades there. And then those in the swing trading service as well, you guys know the tickets for the week. Once they trigger tomorrow, I'm going to alert it, and we are all going to trade it together. Okay, have a good night, guys. See you in the next live stream. Bye for now.